Hey, it's Ray, and welcome to episode 2. In this video, I want to talk about my net worth and how knowing my net worth can help support my dream to buy a holiday home. I'll be sharing a spreadsheet on my financials, so if you're listening to this on a podcast, it would be better to watch this video on my YouTube channel. Now, the most important question you've got to consider when buying any big ticket item is whether you can afford it. And the best way to answer that question is to find out your net worth. So what is net worth? Very simply, it is your assets, what you own, minus your liabilities, what you owe. Assets are things that hold monetary value, like your car, your property, your investments. And liabilities are your debts, like car loans, mortgage, credit card debt. So your net worth basically tells you your financial health. If you have more assets than liabilities, you're healthy. If you have more liabilities than assets, you're unwell. So to illustrate this concept, I'll be explaining my own net worth using this spreadsheet. Now, this spreadsheet is done by Lisa's Adulting in Singapore. She does YouTube videos on personal finance. She's smart, she's young, but very matured in her thinking towards finance. I mean, me as a 35-year-old is listening to someone who's 25, 10 years younger than me. So obviously she's doing something right. So if you'd like to follow her, the link is in the description below. So let's start with the top, my net worth. The number on my left at $903,000 is my net worth without my property. And the number on my right is my net worth with my property at $1,734,000. And basically it'll tell me how much I would have if I sold my property. Now moving on, we have this table that lists down all my assets. Under this column are my asset types. Under this column, the liquidity, which explains how liquid it is to convert my assets into cash. Liquid being very easy, non-liquid being very hard. Next, I have this column which tells you when it was last updated, then followed by notes, and in the last column, I have the current value. So let's go through my assets line by line. Number 1 on my table is my property, a 3-bedroom condo. I bought it last year, and in today's market value, it's about $3.21 million. Now, I got the valuation through 99.co's property valuation tool. The link is in the description, and this number will be updated monthly. Next will be my CPF account. I'm unable to touch any of these monies until I turn 55. My OA account, as you can see, is really low, and that is because I used a big portion of it to help pay for my property. Next are my investments, and I've split them into long-term and short-term. Now, under long-term, I have cash amounting to $528,000. The reason I put it here is because this money is pledged to my bank to secure my mortgage. It was a requirement as my salary was not high enough. I'll be able to unlock a portion of this pledged amount next year when I do a repricing, and I intend to use some of this cash to invest for my retirement and a portion of it to finance my holiday home. So that is why I placed this amount under long-term investments. Now moving on to my short-term investments, I hold Tesla. I hold Marathon Digital Holdings, which is a US-based Bitcoin miner. I hold some cryptocurrencies on CoinHako and Gemini. Now, as you can see, I do not diversify. Do not follow me. I'm very comfortable with this strategy because mainly the total value of my short-term investments amount to about 13.5% of my entire net worth. Moving on, I have my insurance policies, and at number 1, I have a universal life plan called Prudential Vantage Achiever Prime with a surrender value of $122,107. I bought this is to ensure I give some protection to my family from my mortgage. The other policies I have only cover hospitalization and treatment bills, so they do not have any surrender value. The last two policies are life insurance plans for my kids, and the surrender value is really low because I only started the policy just 2 years ago. Next on the list are my cash and cash equivalents, and listed below are my various bank accounts and what they're holding. I do have a Japanese bank account, and over here you can see it's equivalent to about $5,500 Sing dollars, and my plan is to build it up to about 50,000 to 60,000 by the end of the year. So now all items in my asset table have been disclosed, and here's the total. $4,228,809. Now, over here in this table, I've broken down the total assets into subcategories. Over here, we have non-liquid assets, which amounts to $3,802,899. Second in line, we have assets excluding property, which amounts to $1,018,809. Then we have my retirement assets, which includes my CPF funds, my long-term investments, and my insurance. Basically money that I'm not going to touch for a long while. And the total amount is $715,307. Next, we have my semi-liquid and liquid assets. These two are very important to me because they show how my financial health is going to be in the short term, within 6 to 18 months. These two assets will fluctuate a lot because they are all tied up in Tesla stocks and cryptocurrencies. And if there's a dip, I will convert some of my liquid cash into investments. Ideally, I would like my semi-liquid and liquid assets to be above 400,000 and my liquid assets to be above 100,000. So hopefully the markets can turn around soon. Moving on from my assets are my liabilities, and over here I have a big mortgage of $2,379,507. Apart from that, I have taken up a loan to buy my life insurance. Why I did this is because I'm not required to repay the loan, only the interest portion. Any outstanding amount will be deducted from the death benefit, and thus lowering my monthly expenses. In the last line, I have my credit card bill, and I spent $6,125 last month, bringing a total of my liabilities to $2,494,509. So that is the entire breakdown of my net worth, and that is how I figure out these two numbers on top. For the number over here, I take my total assets minus my total liability. And for the number on the left, I take my total assets excluding property minus my life insurance loan and my credit card loan. So very simple, just assets minus liabilities. Moving on to the next section of the spreadsheet quickly. Over here, I have 8 finance ratios that will tell you what you can improve on. You can click on the link over here that will give you a better explanation on the ratios. And I'll go through my ratios that are highlighted in red. Line number 1, we have liquid assets to net worth ratio. And mine is at 4%, and the general acceptable range is 15%. So this ratio is actually telling me that I need to raise more cash, but I'm not too worried about this because, as you know, I do have almost $500,000 locked up in the long-term investment account. Second in line, we have savings ratio, and mine is at 0. The general acceptable range is at least 20%, and mine is 0 is because I pay myself a salary and I pay it really low. So, of course, I have no savings. So there are 2 solutions. Number 1, increase my income. Number 2, reduce my expenses. Next, we have debt to asset ratio, and mine is at 58.99%. Basically, is saying that I have a higher than the acceptable debt level, which should be 50% or less. Next, we have debt servicing ratio, and mine sits at 100%. Basically, it's saying all my income goes into servicing my monthly mortgage. And as mentioned earlier, that's because my salary is low. Finally, we have net investment assets to net worth ratio, basically saying how much of your net worth is used to help you build wealth. And for me, it's 25%. The acceptable range should be 50%. So as you can see, I have lots to work on, especially on improving my income and reducing my monthly expenses. Now let's move on to the last section, and over here you can see how I allocate my assets, and a big portion of my net worth is in real estate and in cash. So to me, I would call this a moderately conservative portfolio, and I'm very happy with my allocation at the moment. So this is the end of the video, and that is how I find my net worth. I hope you found this useful. And the question is, can I afford a holiday at home? And of course, my answer is yes, as long as I don't get into debt. And I target to use only 10% of my net worth to fund my dream holiday home in Japan. But what do you think? Is 10% too conservative? Let me know in the comment section below. Thanks for staying with me to the end. I hope you found this video interesting. This is my first time calculating my net worth because I needed to know whether I can really afford a second home, and if I can, what is my budget. I never did this for my first property because it felt like I was buying a home for my family and I need it for stability. So as long as I can get financing for it, I just went for it. However, for a second property, I don't have this feeling that I need it. It feels more like buying a car, a lifestyle, and so I really did not want this purchase to impact my finances. So that is the reason why I'm doing this video, and I would like to thank Lisa again, who did this template up, and she explained very clearly why it's important to know your net worth. Her YouTube channel link is in the description below. Now moving forward, I plan to do monthly updates on my net worth to basically track the overall trend. Hopefully as I age, my net worth will grow along with me. And if you want to follow along my journey, be sure to subscribe, and I'll see you in my next video.